VWAP is the single line most institutional desks judge their own fills against. If a portfolio manager bought above VWAP, they paid up. Below it, they got a better print than the average participant. That benchmark pressure creates real, observable behavior in price, and that is exactly what we are going to exploit today. By the end of this video, you will know how VWAP is built, how to anchor it, how to trade pullbacks and rejections, and where it quietly fails. VWAP is the cumulative volume-weighted average price since a chosen anchor, typically the session open. For each bar, take the typical price, high plus low plus close divided by 3, multiply by that bar's volume, sum those across the session, and divide by cumulative volume. The key word is cumulative. Unlike a moving average, VWAP has memory of every share traded since the anchor, which is precisely why it lags less in the morning and stiffens up by the close. Wrap VWAP in volume-weighted standard deviation bands at 1 and 2 sigma, and you get a dynamic map of fair value. Price inside the first band is balanced. A push to the second band without acceptance is statistical stretch. Acceptance beyond 2 sigma signals a regime change, often a trend day. Read the bands like Bollinger Bands, but remember the dispersion here is weighted by participation, not just price variance. The session anchor is just one choice. Anchor VWAP to an earnings release, a Federal Reserve decision, a swing high, or the first tick after a gap, and the line becomes the volume-weighted cost basis of every participant since that event. That is incredibly powerful. Holders above an anchored VWAP are collectively in profit and likely to defend it. Below it, they are underwater and prone to sell rallies back to break-even. On a balanced day, VWAP acts as a magnet. Price extends to the lower band, momentum stalls, and large algorithms scale in toward the average. The classic entry is a rejection wick at the lower sigma band with declining volume on the push, targeting a return to VWAP. Stops sit just beyond the band extreme. This works in ranges and on rotational days. It fails badly on trend days, which is why context matters more than the signal itself. On trend days, flip the playbook. Price opens, drives away from VWAP, then pulls back to it on lighter volume. That retest is where trend-following desks add. Look for a low-volume drift into VWAP, then a rejection candle in the direction of the prior thrust. Risk sits on the far side of VWAP. The cleanest version happens in the first 2 hours, when VWAP is most reactive and the cumulative volume is still small enough to flex. Here is Apple on the daily chart with VWAP anchored to a major swing low. Notice how the line acted as dynamic support for months. Every retest produced a reaction, and the eventual breakdown through anchored VWAP on rising volume marked a clear character change. This is the institutional cost basis made visible. The break did not just signal weakness, it signaled that the average buyer since the anchor was now losing money. VWAP improves dramatically when stacked with orthogonal tools. Combine it with prior day high, low, and close for horizontal context. Add a volume profile to find high-volume nodes that often coincide with VWAP magnetism. Layer in a momentum oscillator like RSI to time the rejection. The best trades happen when anchored VWAP, a profile node, and an oscillator divergence all line up at the same price. That is confluence, not coincidence. VWAP is not magic. Late in the session, it becomes sticky because cumulative volume is huge, so small price moves barely shift the line. In thin pre-market or low liquidity names, a single block trade can yank VWAP around and generate false signals. And on news-driven gap days, the prior session VWAP is essentially meaningless until a new anchor establishes. Know which regime you are in before you trust the line. Watch for price making a new high while the distance from VWAP contracts. That compression signals weakening thrust, similar to a momentum divergence. Conversely, price holding above VWAP while an oscillator prints lower lows often resolves higher because the institutional benchmark is being defended. Read VWAP relative location, not just the cross. 3 traps to avoid. First, treating every VWAP cross as a signal. Most are noise. Second, using session VWAP on a multi-day swing trade where it resets every morning and tells you nothing about positioning. Use anchored VWAP instead. Third, ignoring the band width. Narrow bands mean compressed volatility and impending expansion. Wide bands mean you are already late to the move. Tomorrow, do 3 things. Drop session VWAP on your intraday chart and classify the open as trend or balance using the first hour relationship to the line. Anchor a second VWAP to your most recent significant event, earnings, gap, or swing pivot. Add 1 or 2 sigma bands. Then watch how price interacts with those references before you click. This is education, not financial advice. Manage risk, size appropriately, and let the benchmark do the heavy lifting. If this helped, do me a favor. Hit the like button, subscribe, and tap the bell so you don't miss the next one. See you in the next video.